Welcome to Market Matters. I'm Jonathan Gan together with Sulhi Azman and Charlotte Chong. Let's jump right into it, guys. It seems like another dip for KLCI today on regionally poor economic data from China. So the preliminary PMI index from Caixin Media and Market Economics was at 47 for September, indicating contraction.
Well, John, the slowdown in Chinese market has actually propelled the Federal Reserve Chairwoman Janet Yellen to not pull the interest rate trigger. And I think China is now the talk of the market, the talk of the economy. The slow growth in China has affected everyone, basically.
That's true. So I think there was more wisdom behind what Janet Yellen pulled. But Charlotte has more on the details.
Actually, you are right, Sulhi. Basically, what happened was investors are very cautious about the whole China-led slow global growth. And when we look at the Asian regional market today, we saw a sea of red within the Asian region. KLCI dropped as well. KLCI, Jakarta Composite Index dropped 2.29%. Hang Seng Index dropped 2.82%. Now, all these dropping was because of what happened yesterday when China haven't actually released the PMI figures, but Caixin actually came out and say that PMI figures would actually drop to a 6.5-year low of 47 points. Now, last month, we saw about 47.2 points in August, and now it's 47 points. Basically, what the gauge actually told us that any figure below 50 signify a deterioration of the economy in the country. Now, it also looks like the news, 20 billion to value cap scenario Berhad last week, announced by our dear Prime Minister, was short-lived. KLCI actually went up only 2% last Thursday after the news came out on Wednesday. And since then, KLCI continued its downward trend since last Friday, now dropping at 1.36% down today at 1,613.17 points. Bank Negara yesterday announced that foreign reserves was up marginally to 95.8 billion US dollars. But it did not help KLCI at all.
Yeah, because everyone was saying that the reserves have been dwindling, but now even with the positive news, right, it failed to actually lift off anything in the market, in the local market especially.
Yeah. Well, back to you guys. That's all I have today.
All right, thanks for that, Charlotte. So for our sizzling moments on hot stock today, we have UEM Sunrise, which rose 8 cents to close at 1 ringgit and 15 cents. It's the obvious choice of the day because of its active trade. 81 million shares traded.
81 million shares traded. I think there are some renewed interest in this particular stock. Market rumors, John, I've been informed reliably by my sources that there is some kind of privatization going on there.
Indeed.
Rumors.
I think it's because of this that UAM Sunrise has seen such market fervor today, and with 81 million shares traded on a stock like a property stock in this kind of a market.
Now, I understand that you are one of the very bearish on the property market, but I think there are some some positive sides. I mean, should the takeover be confirmed? Because UEM Sunrise, 75% of the land banks are highly exposed in Iskandar, Malaysia, Johor. They also have some which is their crown jewel basically. But now they're also said to be one of the front runners in bidding for some 1MDB project in Bandar, Malaysia. I mean, I think to me that bodes quite well for Khazanah, don't you think?
Yeah, well, that may be true. I also read a recent report by Maybank saying that UEM Sunrise is actually unlikely to be privatized. We see that Khazanah needs to fork out 1.63 billion, assuming a 20% premium for the remaining 33% of the company. And looking at how soft property markets are, I feel it's actually dangerous to actually go in like that. You don't know whether or not it's going to hold water.
I mean, the valuation has come down, right, John? I think it is not. I mean, it's not. UEM Sunrise is definitely not the cheapest property counters there is in the market. But at about 10 to 11 times earnings, isn't that a good value for Khazanah to do so?
Well, thing is that I read almost 3 analysts saying that they are expecting slower growth and they are cutting down targets. So in a note 2 months ago, analysts Sarah Lim and Adrian Ng of Kenanga Research have actually pointed out that they see no near-term catalyst for the sector. And they are also monitoring whether or not a lot of developers are going to hit their targets because of the volatile stock market.
But John, I think there might be some re-rating catalysts. Maybe I mean Maybank investment estimates that should UEM Sunrise clinch that job in Bandar Malaysia, right? Potential GDV of 5 billion ringgit. Now, Bandar Malaysia has a slated GDV of 40 billion ringgit, and 5 billion out of 40 billion is about 12.5% market share there in Bandar Malaysia. Isn't that not a good news?
Well, on that note, we actually have to wrap up. Basically, to sum up, UEM Sunrise we feel is an undervalued company, but the company actually faces weak property sentiments, although its earnings and some of its prospects, including those in Bandar Malaysia, seem to remain intact. So whether or not it's privatized will remain to be seen, but of course the stock is in focus because of the possibility that it will be privatized by Khazanah Nasional.